In Hawaii there's so much to do. There's hula, there's surfing and real estate too. We just two local guys with so much to say. So listen to the Real Estate Braddahs today.
All right, I think we're live. Would you kick us off?
Hey, hi everyone. Thank you for tuning in to episode 27, May 2020 of the Real Estate Brothers, featuring myself, Dean Ueda, and my co-host, Lane Kawaoka. So just some things we're going to talk about today. We're going to go into Oahu statistics. We haven't done that in a while, but I figured let's touch base again on some of them, as well as talking about some COVID-19 issues, hardest hitting states, a landlording article that was provided by one of our listeners, and also uh, a homeowner hack that I wanted to talk about since people are home and have time. So that's me, Dean Ueda. I'm a full-time realtor, been an accountant and CPA for 19 years, and now I'm doing real estate investing and sales. So let's jump right into April statistics for Oahu. It's pretty interesting. You'll see that for median single family prices, we have a 5.5% increase to 809,000, as well as an increase on the condo prices at 450,000, an increase of 7.4%. Closed sales, we see, not surprisingly, a decrease of 22% for single family homes at 248 sales in April, and 343 closed sales in for condos, and that's a 28% decrease. Median days on market, we see actually it shortened, so went 19 days for single family, which is a 24% speed up, I guess you could say, of 4 days. 6 days faster. And for condo prices, we have median days on market at 27 days, which is a 7% drop, or 2 days faster. The biggest news, or one of the biggest news, it's in that small print down below, is the large decrease in new listings. So for single family, we have 290 new listings in April, which is a decrease of 46%. And for condos, we have 440 new listings, down about 40%, which is interesting. And I will discuss that on a future slide coming up. But before we jump into that, I just wanted to mention, oh, wait a minute, let's wait for May. And the reason why I say that is because the stay-at-home, work-from-home mandate for Oahu started on March 22nd. So if we were to add 30 days to that, which is the estimating as the real estate transaction from acceptance to recording, that would take us out till April 22nd, which is only 9 days of April included for, I guess, we can say is affected from this mandate. But there are other statistics that we can look at, and that's why I wanted to look at the data. And also, when May comes up, then we'll be able to hit the ground running on those. So one point I wanted to bring up was months of inventory and the trend. So we're looking here again on Oahu. We'll see, if you look at the arrows, I put the arrows in red just to show the trend. But months of inventory to keep in mind is, if there are no more homes coming on market, this is how long it would take for the current inventory to be sold off. And the general rule of thumb is that anything less than 6 months of inventory is a seller's market. So one thing good, if we look at the condos, we are at 3.6 months of inventory, and single family, we have 2.5 months left in months of inventory. And if you can see, the trend is going down for single family and staying consistent for condos. And so one other statistic that we wanted to look at on the next slide was new listings. And as we talked about in that first slide, there's a big drop. And so this is one of the statistics that we can look at that doesn't really matter that there's only 9 days that were affected theoretically from the mandate. But like as Lane made that sound, we see a major trend and decline in the last 4 months pretty much for condos and single family. So basically this is definitely a stat that we want to watch out for in the next few months, because if sellers are holding off on these listings and it's proportionate to the slowing of sales, then we might not see much change in the months of inventory number, which could mean a good sign in terms of price stability for us. Yeah. So that's why these stats is something that we want to look up on. And when May comes rolling around, we're going to definitely hone in on those. And it's something that I'm going to be watching and hopefully can provide to you folks.
So everybody got freaked out. What, May 15th or March 15th was kind of the day, right? When things
right. That's when those cases started popping up kind of big. Yeah.
So what do you think the psychology of, all right, if you had a client and they had a listing that was maybe a month in or maybe a few days in, would you pull the listing? Or
personally, if they can hold off, I would say just keep it there, and I wouldn't. Of course, this is all based on situation, but if the seller can hold off and doesn't need to sell immediately and can hold off, I would say we just keep it as is, and I wouldn't adjust the price, because right now the market is very much in turmoil. So we have buyers that are. We have some buyers that are still willing to buy, but probably the majority is kind of pulling off, or maybe even not able to buy. So, but with that said, there are still buyers out there, and the cool thing, not the cool thing, but we're still having showings. We're following the safety standards, but we're still having private showings. And now, with that said, when you do have showings coming through, they are more serious buyers and not so much tire kickers, because we've sent them the video, we sent them the 360 virtual tour, or we did a live Zoom virtual showing, and now they want to see the place. The last step is to see the place for themselves. So with that said, that if they're coming in and they're taking the time, if you will, to go and see the property, that they're serious buyers. So that's a good thing. Yeah. So
same thing on the rental side, right? Most people are if their lease is expiring, they're just gonna go month to month, and the landlords are all cool because the landlords are kind of desperate.
Yep.
So if people are coming checking out your rental, they're serious.
Yeah. So you bring that up on that rental side. Yeah, that brings up a very interesting challenge for landlords too, right? So, and again, we talk about another statistic that's related: active listings and the trend here. So for condos, we have just below 2,200 in available listings for condos, and single family just below 1,200 for those. But you can see the trend per the arrows; it's a downward trend. So that is good sign from the standpoint of economics, I guess you could say, supply and demand. Because if demand in theory is going down and supply is staying low, then hopefully the equilibriums are still there and there won't be much of a drop in terms of prices. Yeah. With the good news, we had to mix it up, right? So here's a Wallet Hub report that came out. Keep in mind, this is the April 13th report, and it was showing states per their analysis most affected in terms of small businesses due to COVID-19. And as you can see, Hawaii is ranked number 1 for being affected or having small businesses affected. And Nevada is number 2. So I have the inkling that it's related to our dependence on the tourism industry. I don't know. Can't say the same for 3, 4, or 5, but I mean, that's just a gut. Yeah.
Number 1 and 2 is hospitality and travel.
Yeah. So just to give some perspective, and that's the link below if you wanted to follow it. Transitioning over to another COVID-related topic this is a landlord article that was sent to us by one of our longtime viewers. Thank you, Didi, for sending this in. And she was saying some information for landlords who are self-managing, or property managers for that matter. So this was she found on Bigger Pockets, and this was regarding someone who was using self-managing, and they had 1 unit 1 week, 10 applications, and how to fill vacant units while practicing social distancing. So the 6-step process they had talked about online marketing, automated showing box, online apps, lease signing, online payment, and moving in. I thought it was an interesting article, but I had a few words of cautions or points to bring up. And the first one was regarding step 2, the automated showing box. So apparently there are third-party companies that you can hire, and they'll put the lockbox on the rental, and they will vet out and help you vet out these potential renters and give them access so that they can see the unit themselves. So for me personally, I'm not there yet, and I wouldn't feel comfortable allowing these third-party services to do that. So I would, and so maybe that's me, and this person obviously had a case that worked out perfectly fine. But for me, that's something that I'm not comfortable with yet. So second thing I want to bring up was beware of scams, because for a while now we've heard about scammers taking listings, for sale listings. They'll take the pictures, they'll take the videos, and they'll throw it up on a website and say, oh, check this place out, it's for rent. And send in your application and your fee and your deposit here, and we'll get you in. And there's been renters that have been scammed this way, so please be careful of those kind of things. Then the fact that buyers and renters, sorry with the misspelling, they still want to physically go in and see these places at the end of the day. Majority of them, especially for the owner occupants, on the buyer side. Of course, you have buyers, investors who are willing to buy sight unseen. But then again, for those people, especially me as an investor, I'll have at least someone else physically go in there, whether it be my realtor and my property manager, as before we put in an offer. And then so my fourth point was for self-managing landlords. If you're trying to do these kind of things and practice social distancing, one thing you can do is include a marketing video, include a virtual tour, and offer virtual walkthroughs via Facebook Live, Zoom, WebEx, or whatnot. And that will help people or potential renters to see the property short of coming into and physically seeing it. And my last point is, I know Lane, we always talk about this, leave it to the experts. A lot of times there's a lot of heartache for us self-managers, myself included. I self-managed my properties early on, but a lot of times it's worth the money. Just leverage it out, pay the property manager to do what they do best. So
can you even manage your property if you don't have a real estate license in Hawaii?
Yeah. Yes.
Okay.
In fact, if you have your license in Hawaii, you then are supposed to have it rented out. Well, it's a little bit gray, and I've heard different points, but in general, what I've been hearing is that if you own your own rental property and you have a license, you needed to market it and rent it out through a licensed property manager. So someone who, So if you own on your own and you're not licensed, then you can rent it out on your own.
I know on the mainland, most times you need a license to be a PM.
Oh, really? You can't just self-manage?
Yeah.
Huh.
But different states.
Yeah. One thing I wanted to talk about, since people have time and being at home now, is a homeowner hack. and it's regarding the exterior of your home and the exterior of the paint. I spoke to a few vendors, including professional painters and um, general contractors, and they all told me the same thing. It's, to preserve the lifetime of the outside, you can shoot down the exterior of your home with a garden hose. If you have power washer, or you have big brushes to scrub it, even better, to knock off the big debris. But this is to take off all the surface dirt and the debris, and this may extend the exterior paint for upwards of 3-4 years. And that the reason why is you're taking off the surface dirt and debris that potentially is making the oxidization and making the paint break down quicker. So doing this every 6 months, once a year, could save a lot of money in terms of having to go and paint the outside. So just remember, close all your windows and your openings, cover up your electrical lights and outlets, and wait 24 hours at least before you start flicking on the lights and the outlets outside again. But I know that people may have time nowadays and are home for a while. So before they lift the stay-at-home, work-at-home mandate, then now might be a very good time to do this to potentially defer some maintenance costs in the future.
Don't go overboard, right? Don't go run down the sidewalk and spraying everything.
Well, and I've seen people rent the power washers, and actually, it's like a laser of water. So be careful, because you can make a pretty good slash in your skin.
Yeah. People geek out over that stuff, like bubble wrap, right? Popping bubbles on bubble wrap.
Yeah.
So yeah, if you guys haven't checked out my podcast, we talk a lot about syndications and turnkey rentals. We're on the passive investing side, no house flipping, no wholesaling, nothing like that. And join our community at raaloha.com. But I'm going to kind of take folks through a little collection of articles, starting chronologically at the beginning of the month. Kind of showing this recap and the story that was this COVID-19, what was it, April 2020. So we kind of started the month with Gap, Macy's, Kohl's, and furloughing a lot of employees, which is the same story. Under Armour furloughed 6,600 workers. This is pretty much going around all over the country. Unemployment sort of spiked. I think we all kind of saw these headlines coming. First week of April, Warren Buffett dumped his airline stocks. He sold about 18% of his stake in Delta Airlines and 4% of his holding in Southwest. I don't have any stocks, and I wouldn't be buying more if Warren Buffett's dumping his. But I don't know. Did you buy some more?
I'm messing around with some day trading and things, but I'm still not jumping into the market. I'm still in the short mindset.
You should go buy one of those pressure washers instead of
hey, that's probably
gambling at home. Might be safer, right?
Yeah. This is in lieu of going to Vegas, since I can't go to Vegas. But I'm definitely not jumping back in the market. But it's funny that you bring that up, because I believe more unemployment stats came out today that were kind of saddening, yet the markets went up. So it's kind of
and that's why I don't like the stock market. It's all fake news anyway. I mean, they have to write an article to substantiate what happened today, and sometimes the articles, if you watch it every day, you're like, oh, that's actually a bad news headline, but the market's going up.
The only thing I can think of is that all that news is baked into the current prices. That's the only thing, and so everyone is banking on the future, and the fact that the various governments are pouring in all these funds to save the markets, and that's my rationalization for why the market's doing what they're doing. But how long can they do it for, and how long is it gonna work for? I mean, who knows? Maybe it's upward from here in the stock market, which would be great, but it's just hard for me to understand. So I'm still not jumping into the markets yet. I'm still staying on the side.
I don't invest in anything I don't understand. So GDP fell 4.8% annual rate, the first quarterly drop since 2014. worst quarterly drop since 2008, which just makes sense, right? Nobody could go to work, or well, the economy basically shut down. Consumer spending plunged 7.6%, most since 1980, and accounts for 70% of the GDP. Next quarter, economists are projecting at least a 30% annual declines. But a lot of this is, duh. We kind of knew this is going to happen.
Yeah.
This report came from out of CBRE, a commercial real estate company, in the beginning of the month. So, reading some of the highlights here, we appear to be past the peak of infections, but the U.S. GDP is expected to contract severely in quarter 2 before giving way to stronger growth starting in quarter 3, supported by the government's stimulus and pent-up demand. Dallas, Fort Worth, Houston, Atlanta are hopeful markets to watch as their economies begin to reopen in phases. And it seems like everybody pokes fun at Georgia, right? But they're the brave ones going to try and reopen first. Good for them.
Well, I think today Trump came up with some guidance too in terms of the states being allowed to open up, and they weren't hard, fast. It's just purely guidance. So I think he said if there was a 14 days of steady decline in cases in the respective states, then that would be okay for them to open. And when you looked at that, there were, I think, 19 other states didn't pass that rule, I guess, for his guidance, but are still planning to open up. So, I mean, we'll see, right?
Yeah, we'll see. So here's an example of a bad news article, in my opinion. The Wall Street Journal came out and said nearly a third of U.S. apartment renters didn't pay April rent. I don't know where the heck they got their data, probably from California and those type of areas, but I mean, that's not what the industry media is saying here. Multi-Housing News is, in the beginning of the month, they came out and said, report that found nearly 70% of rental households across the nation paid their rent, and that crept up as we moved throughout the month. Later, it hit 89%, and this got also confirmed by another source, which said rent payment rate at 93% of prior month. And across our portfolio of 3,500 units, collections are typically in like the 97% range. Normally, you're always, out of 100 units, you're always going to have 3 deadbeats not paying. So that's baseline. So April, maybe there was like a few percent points, 5% points less. So low 90s, which isn't that bad, and most of them we got to work with, and they caught up by the end of the month. Thus far, we're in the first week of May, and I was a little anxious on how collections were happening, but I got my property management reports from almost half of my guys, and thus far things are looking pretty good. Maybe a little bit less than April, but I think overall I'm pretty relieved. You're seeing that from your individual units.
Same here. I just checked in with my property managers this week, and I was pleasantly surprised with the results of mine. And actually, I think I mentioned it last episode, is that my issues are with a few tenants that were pre-existing. So I'm happy with what results for me were so far.
See what happens when you have low expectations? You're happy. So some of the people who got hurt here, like student housing, seems to be impacted. I guess what's happening here is schools don't really know when they're going to go back in session, and a lot of the parents are the ones flipping the bill for these kids, housing. At least that's how it was when I was going to school.
Yep.
So there's going to be a pent-up demand, and pre-leasing will be backloaded until parents feel comfortable. I don't like investing in student housing. Office leasing is getting killed, right? Tenants and landlords are still trying to work together, understanding the respective needs of one another, whereas, office people, they just can't go to work right now. So that's going down. I think the biggest loser is the short-term rentals.
Yes.
And I've been a big, I don't know, blocker, is that the right word of it? I just don't like this stuff. This is the exact reason why. AirDNA, which is a great source for short-term rental information, says that dropped 80% compared to previous week in the week beginning March 9th, and another 10% on top of that in the week of March 16th. In the middle of March, bookings in New York, San Fran, Seattle already dropped more than 50% compared to the week beginning of January 5th, with drops of 35% in Washington, D.C. Have you seen any desperate short-term rental guys unload their properties on the market yet, or any a lot of short-term rentals here, right?
Yeah, we've had the after effects of the changes in the law. So I personally haven't seen any people running with fire sales regarding short-term rentals. So not locally anyway.
A little early. Another chart here, basically outlining the pew on the. That's our high tech.
You gotta get a tech guy to make that into
post production, right? Sound effects.
Yeah.
Hopefully, it puts like some kind of fun rocket or something, which we'll put on the YouTube channel, where we kind of clean this version up and send it out to you guys. And then, so this was Green Street Advisors, another commercial real estate firm, that they put this chart out, and they outlined all the different asset classes. So some of the highest risks of pandemic are like travel, lodging, senior housing, student housing, SNFs, which is kind of like season housing, gaming. So we mentioned like Las Vegas earlier. I think I'll talk about that more. But I think the multi-housing news says the best value in the downturn may be the good old workforce housing. Hey. So this is a pretty good article. So what they did was they defined this term vulnerable industries, and that's hospitality and restaurant. So restaurants got hit hard because they can't even open really unless they drink takeout. And then hospitality, which is travel and like hotels, casinos, exactly what Las Vegas and Hawaii is. So they took all those people living with those type of jobs. About 18% of them lived in apartments, which is a minority compared to most of them. 52% will live in houses that they own, and 28% will live in single-family home rentals. So it took me a while to kind of digest this article, but basically what they're saying is like those kinds of hospitality and food workers, the vast majority, probably 80% of them live in single-family homes, whether they own it or rent it, not the apartments. Some other CBRE highlights: increased multifamily vacancy, declining rents over the next 2 months is what they're predicting. Multifamily market will bottom out in Q3, but begin a recovery in Q4, fully recover in 2021. And here's another thing that we should, people who are always looking at what the interest rates are. The Federal Reserve pledged to keep interest rates near zero until full employment returns and inflation exceeds 2%. So don't quote me, quote them. They said it right there. Also, in terms of lending, now Chase is starting to tighten up a lot of their credit score requirements. So they are needing at least a 700 and require a 20% down payment. And this is just one firm, but Chase is a big player, so people will probably just copy what they do.
Yeah.
They sort of move the market.
I heard the jumbo loans are being hard to get into now. That it's kind of drying up.
Yeah, no jumbo loans. And here's my guess is you're going to have more people renting houses to live because they can't afford it, and more apartment renters, and potentially lower condo prices. Because here, follow me on this one, Dean. If these guys on the fringe of this credit score are going to get dreams of owning a house going to get kiboshed by these little tighter restrictions, those are the guys going after the condos, right? The condos are like your fringe type of buyers.
Right.
They don't have the financial backing of people buying bigger houses, houses. So I think you're going to start to see that condo price start to dip. But I don't know. In Hawaii, it's a little skewed, right? Because the condos are like luxury stuff, right? None of the locals are buying that. So
Well, typically, yeah, the first time homeowners you got to start off at a condo with the price points being so high, right?
yeah. So I think the condo prices overall are going to go down just because of this. On the bigger stuff, the Fannie Mae, Freddie Mac on our apartment syndications, they're requiring 6 to 18 months of PITI. And this should also filter down to individual mom and pop investors where they're going to require more months of cash reserves too. I don't know what you think of this, Dean, but like here's a list of the 15 fastest growing mega cities. The biggest one that America has is New York City at 15 million. But this article was kind of talking about like, with the pandemic and people close in proximity, maybe people are going to want to move out to less densely populated areas.
Anyone related to Japan kind of threw me off because I thought they had an issue with the population growing. But I guess maybe this is immigrating to those areas. Is that what it is?
Yeah,
looking for action.
Or like in Tokyo, for example, people moving outside to the smaller cities and towns outside of it, as opposed to clumping in the one mega city.
Oh, these are moving. I'm sorry, this is moving out.
Well, it's just
expanding.
They're just kind of saying that, right? I mean, the media's always gonna spin some kind of story.
Yeah,
always. But it kind of makes sense, right?
Yeah.
So here is similar to your Wallet Hub article. Which are the markets with the top leisure and hospitality? That's Las Vegas, Orlando, Florida. Hawaii wasn't on this one. My guess is Hawaii's just too small to crack the top. Kind of like the top free throws take percentage, right? You got to shoot at least 500 free throws or something. Or like that.
Maybe we have enough military to balance it out or something.
Yeah.
But actually,
well, this is just of leisure and hospitality.
Oh, I'm sorry.
Yeah.
Oh, got it.
So Nevada and Orlando and Florida are the ones that are in the biggest red zone. Some of the winner in terms of asset classes are grocery retailers, and everybody else lost big in terms of commercial retail.
Costco is still crazy.
Yeah. People spent more this month on groceries and less on travel and shopping, says the New York Times. Captain Obvious, written by Captain Obvious. And people are spending more money on gaming and video games, less on movie theaters, events and attractions, toys. Do you buy anything fun this past month, stuck at home?
I've been on Amazon a lot, and I've been looking for stuff for fun for my home office, trying to decorate it up. I think I want to spiffy it up. Back here it's a little white and plain. So for the Zoom meetings and for these episodes, I want to have a little bit nicer background.
Some nesting activities going on there.
Yeah, so I spent some money on some. I don't know if not staging per se, but I don't know if you got staging props, and even I just recently bought another webcam just for the Zoom meetings or whatnot.
Well, I bought a webcam, but a 4K one, but there was just too many people who bought it. Just like my exercise bike, it never came yet because there's so much demand. Yeah,
majority of the webcams are sold out. I went to Best Buy, it was sold out. Amazon had very few, so I just picked the cheap one and said, let's just try one. Because a lot of times my children are on the laptops doing their work during the day, and so either they're Zooming or they're doing work. So that takes my laptop out of play. So I said, okay, I got to get one for my desktop now.
There you go. Buy the right tools for the job.
Yeah.
So some people were really sad last month because they heard that the Cheesecake Factory was going out of business, but they got bought out by Ronart Capital, $200 million. They came in and they're going to keep Cheesecake Factory in the game.
Yay.
So we were talking about, okay, what's the fallout of this, right? Who are the distressed people that are going to get foreclosed on? So the big losers here are hotel and retail. Normally they're hovering around 1 or 2% of delinquencies, which is 30 days late.
Mm-hmm.
Now hotels at 20% of their folks of their CMBS are late, and retail is at 10%. So I put together a COVID-19 economic survival guide. You guys can go to and reach that at SimplePassiveCashflow.com/COVID-19. But every time I see something new, I add it to that living guide. But we all should have got our stimulus checks, unless you're going to get a paper one, which they start to go out May 4th. A lot of people, at least in my investor group, are trying to take advantage of that. Under the CARES Act, you're able to take $100,000 out of your retirement account penalty free. Normally, you're assessed a 10% withdrawal penalty, but now, because of what's all going on, if you're impacted by the COVID-19, not infected, it's impacted, you can take that money out penalty free. And what's also nice is you have 3 years to pay the taxes back. So a lot of moving around. I got this rollover chart here. If you guys are looking to take money out, or just simply just move something from a Roth to a SEP or vice versa, I found this. I thought this would be a good teaching moment for folks. Like, we usually talk about how the interest rates, the Fed fund rates, is sort of like dry powder to get us going. But in America, we dropped the rates like a full percent point in the beginning of March. And I thought that was pretty unprecedented. But luckily, a week or two later, the $2 trillion stimulus plan came through and saved all of us. And just to recap that, the COVID-19, the CARES Act enacted in March 27th, allowed a 5-year carryback of net operating losses. I just watched a webinar on this, Dean. I still don't really know what it is. I'm just going to give it to my CPA and hope they can get a little bit more. Some other comments on specific states that are going to get impacted. Florida has a lot of tourism. New York has a lot of density and also tourism too. Illinois, they just were in a mess. They're just a hot mess in terms of high corporate taxes, high property taxes, and net migration leaving.
Yeah.
They're not going to fare very well. California has high gas taxes, unfunded pensions, ranked 48th of all U.S. states in overall economic freedom. And then Nevada, we kind of beat them up today with their reliance on tourism. And then the airport hubs are something to look out, like Dallas, Atlanta, Chicago, New York, Denver, Orlando, Washington, D.C., Los Angeles, Seattle, Charlotte, Houston, Seattle are among the top airports for passenger travel. And they're saying it's going to get 18 to 24 months to get back to normal in terms of travel. And another thing, don't forget, this is as much of the oil crisis than anything, so that impacts Houston. Other sectors that are going to get impacted by this: lodging, apartment communities, retail centers, gaming facilities, healthcare, office buildings, conference facilities, entertainment centers. But don't forget, that's why you invest in real estate, where we're in a low interest rate environment. Americans need a place to live, most of which live in apartments or Class B or C housing. And they're going to shop. So we're still going to need grocery anchored retail. Grocery stores did actually pretty well through this. And we're going to need to produce and distribute goods so Dean can order from Amazon. So we're still going to need those warehouse and distribution facilities.
You bring up a good point. I was actually going to put out on one of my last slides, I was going to put up Maslow's hierarchy of needs pyramid, because sheltering is on the bottom of that, right?
Mm-hmm.
So to point that out too, especially for us investors.
Yeah. But the question is for an average renter out there, are they going to save their money to go to their rent, right? If they get a $1,200 stimulus check, hopefully they don't pay their Netflix subscription or their iPhone bill before they pay the rent, right?
Right. Well, another thing too is hopefully they start thinking long term too, because if they are thinking that way and they're going to cover the Netflix subscription or whatnot, you need to consider in the long term, like right now, they might be saying, well, my landlord can't do anything to me right now because they suspended evictions. But what's going to happen 2, 3, 4 months down the road when they can, and at that point, the landlord will have the discretion to put them out or whatnot. So I mean, that's something to very much consider for the tenants to consider, because I think I mentioned in our last episode we had the request from a few of my tenants to potentially amend our lease agreement. I was trying to renew the lease agreement, keep it the same rent, and they had asked, in light of the current situation, if they could lower it. And so I went back to the property manager and asked them, what's the situation? Are they unable to pay? Did they lose their jobs? So both of them were essential workers, and the response was, please forget we asked that. We retract that request, and they signed the renewal. So again, people have to have that right mindset to think long term and not be caught up in all this craziness, which it is. I mean, it's craziness, right? So
yeah, never happened before. But collections are still strong in residential real estate. People need a place to live.
Yep.
And I think maybe the institutions will start to get a little gun shy with funding new hotel projects or assisted living, that kind of stuff, and just go right back to the basics. And remember, I got this graph here. Volatility is real estate's very similar to bonds, where stocks have almost double the amount of volatility, and returns are double of bonds, very similar to stocks. So I mean, to me, a blend between risk-adjusted return. I don't think you can beat real estate. This article is a little old, but I mean, things are changing every day, right? Which states are opening, and I think we're in a time of, feel like the times are changing, right? Like we're kind of coming out of this. May not feel like that in Hawaii, but I'm on the phone with people in Texas all day long, or California, and that's the sentiment I hear from those guys.
What's going to be the new normal?
Yeah, I mean, people were out celebrating on Cinco de Mayo. They were spacing out, social distancing, but they were enjoying the margarita and celebrating and trying to get this damn country back going. So is hope on the way? This is a great article from statnews.com where they chronicle all the little vaccines and treatments that are coming down the pipeline. There's all kinds of news out there, right? Some of these guys say it's going to be ready in 3 months. Some of them it's 3 years. I don't know. They're working on it. And then just a reminder, some of the past pandemics we've had, SARS, MERS, Ebola, the stock market, bounced back in 6 months. Here was a graphic that I put together. People were asking like, oh my God, is the real estate market going to crash? Well, maybe the residential real estate, but at least commercial real estate, it's going to take a lot of steps to get there. I think we kind of got up to tenants can't pay rent and market vacancy go up. I don't think we got past that stage down here.
Yeah, to your point, Lane, there's definitely a lag, in real estate market compared to the stock market whenever a event happens.
Yeah, I mean, I remember in, again, March 15th was when things kind of took a turn for the worse in terms of the stock market, right? Or even before that, right?
Yeah.
And then people were like, the sky is falling. And then people were like, how's the real estate doing? Like, I kind of felt irresponsible because it was like nothing happened. So we're like, I don't know, it's just like another day.
Well, Lane, you're bragging about it.
Yeah. And remember the Fed announced $2.3 trillion in stimulus, and most people are upset about going into more debt. But the way I look at it, investors are sort of cheering in their homes, because when you own real estate, you own fixed commodities or packaged commodities. And when the country tries to inflate our way out of this debt, you're going to be a beneficiary of those things.
Inflation hedges.
Yeah. So we'll end this with some positives coming out of this experience. And I got some here. I don't know if you have any, Dean, but appreciation for stay-at-home spouses. We appreciate you, Dean. I think we all realize how much work you're doing here at home.
I appreciate you, Lane.
Yeah. Virtual learning being accepted, less meetings. People getting outside, walking around. I mean, it looks like Halloween out there every night, huh? Without the costumes. I think I've seen a lot of people questioning the news and media on social media, which I think is healthy. Appreciation for teachers to watch your kids. Time spent with our smaller family units. Virtual Zoom cocktail parties. Any revelations on your side out of this whole thing?
Tied into those comments, the acts of gratitude, right? To be happy with what you have and the situation that you're in, right? So always keeping that mindset is always great. And also to think differently, right? Because sometimes these things can get you down. So, we want to have all those things that you mentioned are great to give us that positive mindset, because things are going to be changed and they're changing already, and there's going to be a new normal. So, those who are adapting now are the ones that are going to be ahead after this is all said and done, right?
Right. Some people are eating a lot, not doing anything in their business, not using this time to fill their minds with new things. And
Yep.
Other people are doing the opposite.
Right.
All right. Well, if there's no questions, we will see you guys next month.
See ya.
Sure.
Free real estate investing group, check out reialoha.com.
We're just two local guys with so much to say. So listen to the real estate Braddahs today.